I'm Diana. I moved to Luxembourg 3 years ago from Lisbon, and so far it's been quite a ride. I am a software engineer and I develop solutions for the payments industry. Moving to Luxembourg was easy. There are a lot of expats, so you'll easily become friends with your work colleagues. Networking is very important here. I was part of an event for women in finance and I got to meet a lot of my peers, which is also very nice to meet other women in the industry. What I really enjoy about my job is that I can help provide solutions to real-life problems and have an impact on people's lives. I see the financial industry in Luxembourg evolving towards tech. They want to innovate their products and services, and a lot of that goes through new technologies. So fintech careers are a huge thing here. When I'm not at work, my favorite thing to do is to ride my motorcycle through the countryside. It helps me to escape a bit the routine of office work and gives you a sense of freedom. It's the best place to start your career, start your life. I think you can get all the advantages of very big cities in Europe without it being so overwhelming.
Welcome to Focus On, bringing together financial industry experts of different horizons, sharing and discussing their insights.
Ladies and gentlemen, welcome to today's Focus on International Payments. Payments are an area that are very much at the nexus of technology and finance, in a field that is currently in the process of substantial change and innovation, both from a regulatory perspective and also from an infrastructure perspective. But this being said, at their most basic, payments are really about connections. They're connecting people to people, people to companies, and in so doing, payments form the lifeblood of the global economy. In today's international world, cross-border and international payments also create important connections between jurisdictions and geographies. So today's discussion is a very timely opportunity to really take the pulse and check the dynamics in this vibrant sector and see where the industry is going. But you don't need to take my word for it. Today we have an excellent range of speakers who will guide us through a whole series of interesting payments use cases. To kick off with, I'm delighted now to welcome Tony Craddock, Director General of the Payments Association, and Thibault de Bassy, Vice Chairman and General Manager of the Payments Association EU, to give us their views on the industry trends in this interesting and exciting field.
Good morning, ladies and gentlemen. I'm Thibault de Bassy from the Payments Association EU, and I'm here with my good friend, Tony Craddock, founder of the Payments Association in London. Good morning, Tony.
Thibault, good morning. Good to see you here.
I think today we are going to talk about the evolution of the payments industry in the UK and in the EU, and so this will be a little dialogue between you and me, Tony. So, Tony, let's start with on a good note, is that we can say that UK opened the way in terms of the evolution of payments. You guys came up with open banking, with fast payments, but that was already a few years ago. So, Tony, I'm asking, how's the landscape in the UK today?
So, sometimes the people who are first are not the winners. And I think what's interesting is seeing how different markets have evolved in recognition of the things that we've laid down in terms of regulation and standards, sometimes to go beyond where we currently are. So the answer to your question is things are thriving, they're healthy, they're vibrant in the UK, Are they as progressive, as early stage, as ahead of the curve as perhaps they used to be? I think that's in question. So while we like to see ourselves, I say the UK market likes to see itself as leading in this amazingly vibrant industry, on occasions I'm concerned because of various internal political factors that suggest that in fact we're not as far ahead as perhaps we used to be.
And well, I think the idea is that we know that in the European Union, everything starts and ends with a regulation, as it was the case in the UK as well. So just to give you a little status update on the European Union here, of course, we are living under PSD2, as you were, and the European Commission this summer started a consultation on the revision of PSD2, preparing therefore PSD3. There is another consultation on open finance, opening the way. We also know that the Commission is preparing a legislation on the access of instant payments because they are not too happy about the way it is proposed today in the EU. And then, of course, we have a fourth stream, which is the whole stream on data. I mean, the successors of GDPR and such, which, of course, is extremely important in payments. By the way, about regulation, Tony, I know you'll be there, but we are organizing a conference with José Manuel Campa, the head of the European Banking Authority in Madrid on October 14. So I would like to mention this for those who are interested. But to you, Tony, on regulation, what's the status in the UK then?
So the thing we sometimes forget is that regulation is not created in isolation. It's a result of a series of interest groups making representation to politicians. Those politicians could be in the European Parliament or they could be in a local parliament. What has happened since we made the rather bizarre decision politically to leave the EU, and I still think it is bizarre, what has happened is we have adhered pretty strictly to the European way of doing things. Because, let's be honest, GDPR, good regulation, PSD1 and 2, good regulation. So the question is what happens from now onwards? And I think if we look at the political backdrop here, and this is something that I think is relevant to everybody within the EU, is that there is a new, there's a new king, which we're all quite happy with, sad by and happy with, but also we have a new prime minister, and the new prime minister has got in on a pretty right-wing agenda, which is all about burning the bonfires of regulation. And I think what we're going to see is an increasingly unleashed financial services industry, which is able to capitalize on not only the desire to protect consumers, but the need to promote competition, which enables innovation, which results in growth. So, Thibaut, I think that our ability to adhere to and our willingness to adhere to the current regulatory framework within the EU is absolutely, there. However, I would not be surprised if there became a very gentle move away from the EU frameworks.
And maybe an additional question, Tony, on the infrastructure, because again, I think that the whole fast payment infrastructure is getting revised, correct?
Yes, there's something called the New Payments Architecture, which is a bit of a misnomer because it was designed 6 years ago. There's currently the people who own faster payments, the Pay.UK as it's referred to, or Pay UK. A couple of years ago put out an invitation to tender, and there's a range of different organisations that are submitting their responses. There's a couple of big players involved, one from outside the UK, one from within the UK. And it's quite exciting to see who's going to win this tender, because what that will enable is not only faster payments, which is instant, very low cost and secure, faster, instant payments, but also the ability to integrate freely and in an efficient way with international payments networks, and countries, but also in a way that adds value in terms of data and other value-added services. So we think that should this be adopted, and I think it will be market-changing in the UK, until, of course, the next thing comes along, which is likely to be stablecoin-based or digital currency-based enabled payments.
We'll come to that later, but maybe talking about a few innovations in payment lately. Of course, there is much talk about buy now, pay later, right? And of course, we know that some market valuation have been severely corrected during the summer. But anyway, the service is still quite popular, right, Tony?
Yeah, it's very popular, and about a third of the consumers think of it as being just simply another way of using their credit cards. And to some extent it is. The difficulty is it's not as transparent and obvious as to what the implications of buying now, paying later actually are. I've taken out a few of these contracts myself, and I know their contracts, and I know I have an obligation to repay. An awful lot of people absolutely max out on their credit card limit each month to enable them to pay later for a portion of their purchases. One of the reasons why the valuations from organizations such as Klarna have absolutely collapsed by 80% or so is because the regulators have finally said, look, this is kind of not transparent, it's not open, it's not clear, and it's not necessarily in the interest of consumers. So the regulators are coming in, they're putting in place new restrictions that will ensure that consumers are absolutely protected as far as they can be. So the BNP bubble hasn't burst, but certainly the heyday has passed. And I think we're going to be in with a very interesting set of market valuations in the next 2 or 3 years in light of the new regulations.
Yeah, plus with rising interest rates, the installments proposed by Buy Now, Pay Later might not be free or entirely interest-free in the future. Just a note on regulation on the EU side, there is a coming directive on credit in general, and apparently Buy Now, Pay Later will be included as part of this regulation, so to be regulated in the EU. I propose we switch to another innovative topic, which is, of course, cryptocurrencies being used in payments. I was reading in a paper that was published with the papers in Amsterdam that now the payments made with cryptocurrencies is only, of course, a tiny fraction of the global payment markets. But of course, everyone is betting on probably an increased market share as a mean of payment. What do you think, Tony?
So the underlying technology is very different to how people are going to use it. And I do not believe that people will be using the ability to transfer your fiat value into cryptocurrency and back into fiat is going to be used for very much other than money laundering or anonymity purposes. But what we see increasingly is a recognition that there is an application of the underlying technology, which could really be very useful. And I'm speaking at a conference in Athens tomorrow about how stablecoins could well become the new e-money. And as you know, the e-money industry has been a great success. It's founded in 2003 with the first e-money directive, then adopted within a part of PSD1 and then 2. It's got 300 organizations around Europe who issue e-money, and billions of euros have been transacted using e-money. It's been a great problem solver for a whole lot of people who want to move money. What I think we're going to see stablecoins as being is, if you like, the next generation of e-money. So rather than thinking that's fancy crypto stuff and I should not be thinking about it, we should and not thinking this is a central bank digital currency, Thibaut, we should think, how is this the next generation of e-money?
Yes, and about CBDC, there was a very interesting announcement here in the EU by the ECB, the European Central Bank, yesterday. So they have selected 5 companies to start a project on digital euro, and it's interesting the way they have segmented it. So we have peer-to-peer online payments given to CaixaBank in Spain, peer-to-peer offline payments given to Worldline, point of sales payments initiated by the paper with by the payer with EPI, which is the European Payment Initiative, which was not in great shape those last months. And then we have point of sale payments with Nexi, and last but not least, e-commerce payments with Amazon. So that is finally, because the Digital Euro project was considered to be quite blurry. So now we see something which is very practical with those 5 companies selected for five use cases. So I think we are living in very interesting times indeed.
I agree completely, and to me, so much of this is about finding an application, piloting, testing it out, learning, and seeing what it actually means in practice. Because, as we all know, the best of plans laid on a business, on an Excel spreadsheet, when you actually put them in the market and try and get people to change their behavior, it's another thing altogether.
Excellent. So the last section of our little talk, Tony, is more about consolidation and evolution of the markets on both sides of the channel. On the European side, we have definitely seen a lot of new players after PSD2, after PSD1, then PSD2. And apparently many new coming unicorns, even despite the market correction this summer. And in a recent white paper we did with the papers, key players in the EU, we have written in a conclusion that the rate at which unicorns are appearing in Europe is now twice the rate that is measured in the USA, which is excellent news for European business in general. But of course, everyone is speculating on mergers and potential players which might be absorbed by their bigger competitors. I guess you see the same thing on the UK, or what's your view in general, Tony?
Yeah, I think we're seeing there's a lake of money out there. There's not a pond or a stream. There's a lake of money out there, but it's becoming increasingly cautious about where it puts where it places its bets. I think organizations that decide to do a wrap up of distressed payments assets will do very nicely. I think organizations that can cherry pick neat, profitable businesses that complement their own, perhaps vertically or horizontally integrating, will also do very well. We're going to see a fair number of organizations who, sadly, have founders who started them and are unable to actually exit with the dream ticket. And I'm also expecting to see that those organizations that have proven themselves able to have a good cash runway and a strong underlying profitable revenue source will be the winners, often the niche ones. But you know what? We're in a time where we've never been like this in our industry before. It's been boom, boom, boom. I'm delighted to hear what you say about fintechs coming through and more unicorns happening. But I think it could well be because of consolidation, bringing together a range of different assets that complement each other, that will allow the selective number of unicorns to romp down to the winning post.
And then obviously another point on the European side is how can you become a truly European player at the size of the continent? And then obviously we have this great system which is passporting, which was meant to achieve that. But of course, many companies who would like to accelerate their growth or their geographical footprint will probably prefer to do it via acquisitions and therefore have a European footprint thanks to the integration of those various local companies. Maybe a word to conclude on my side. There are the speed at which instant payment is getting offered in Europe is quite impressive, and it will, of course, it is sustained by infrastructure that is there. It is sustained by a common standard, which is SCT Inst. And I think we will see many progresses in the coming months, especially if it is being accelerated by a new legislation on access. So I will conclude on that for the European side. A word of conclusion on your side, Tony?
So it's a rather scary thought for most payments companies that the pace of innovation at the moment is so rapid that I think many companies that are in existence now will not exist in 5 years' time. We could be looking at a contraction of the industry of maybe 50%. But what I'm also confident about is that if those organizations that are out there that are prepared to innovate, to take account of the new technologies, the new products and the new capabilities, that they themselves will then build another 50%, so our industry overall is even bigger than it is now. So I'm forecasting a significant volume of redundancies in terms of companies, but a significant growth in new players.
Thank you so much, Tony. This concludes our little session this morning. And I'm now giving the word to Byrne, Vice President, CEO, PayPal Europe, PayPal, which is a happy member of the Payments Association EU. Thank you very much. Bye-bye.
Well, thank you, Tony and Thibault, for that really interesting discussion, which I think really helps set the scene for the rest of the conversations that we're having today. I'm delighted now to be joined in the studio by Byrne, who is the CEO of PayPal Europe. Sean has a very long history at PayPal with 17 years there, previously obviously COO there before becoming CEO, as well as some history in the financial sector prior to PayPal. It's a pleasure to have you here today in the studio.
Thanks very much, Chris. Delighted to be here. Just coming in today, I remembered that last year I think we did this, and I was in my attic in the house. Much prefer this. It's a fabulous setup you have here.
No, it's wonderful to be able to do these things physically now, as you say. So just to turn to our conversation today, the topic obviously is international payments. So maybe you could speak to us about where you've seen the biggest sort of upticks in growth globally, and what are the drivers you think for this?
Yeah, absolutely. So I think, as we entered into 2020, we'd been on a number of years of strong growth for e-commerce and digital payments combined. And then the pandemic happened, and we saw this massive uplift of growth as people moved to digital first, and the lockdowns, much as we experienced last year. 2022 then, I think, a different trajectory. We saw countries moving back from stimulus. We saw people reopening and getting out into the world. And we saw also different kind of mood around the economic metrics. And so at the start of 2022, we were really looking at a situation where projections for e-commerce growth were in and around the 10% or slightly below. As we moved through the year then, what we've seen is those projections have dropped down and probably are sitting around 5 to 7% growth on a global basis, kind of mid-year. Q2 itself, I would say, was flat, potentially negative if you take out travel, which was one of the bigger growth areas. I think we've all seen with the airlines how many people have been, queuing for luggage and things like that. So certainly flat, but hopeful to see how H2 progresses. But if you're a consumer, I think in this environment, you're thinking about value, you're thinking about choice when you go for an e-commerce experience. If you're a merchant, you're very much thinking about conversion. How do I turn my sales leads into, cash flow and sales? And so those two are top of mind. I think on the checkout experience, we're definitely seeing at the industry level, people investing in that checkout experience, merchants looking for light integrations. I think also we're looking to reduce friction and to reduce latency in that experience. And overall, that's driving up conversion, which is the critical driver. For a typical conversion, that could be 50% all the way up to 90% conversion. So a big difference if you're a merchant, how much sales you're going to get in that experience. And the other big area of growth we're seeing is this idea of a digital wallet, this combination of financial services, payments, and commerce, all of that combined in one single conduit for consumers to have easy access to that. And in our experience in the industry, that's moving towards reduced churn, higher use of checkout. So overall, those are probably some of the top teams were seeing for 2022.
Okay, and then, obviously to focus a little bit on that macroeconomic situation, one of the things that is kind of unusually happening at the moment in Europe, unusual in the last 10 years anyway, is an uptick in interest rate environments, particularly in Europe and the US. How do you see that affecting your business?
Yeah, I think it's a very dynamic environment at the moment. I think we all see, looking out there, central banks, certainly over the midpoint onwards, have been increasing interest rates almost globally consolidated level. And when we're looking at that at the industry level, I think people are looking at what's that inflation level looking like? How's that impacting on our consumers? What's their spending habits going to be like? And what does that mean for their confidence and their sentiment? And so, we're sitting here now and saying, right, if you're a strong player in that market, you're probably saying, well, I can invest from my position of strength. I'll be looking to grow my business potentially. If I've got cash flows, positive cash flows as a strong player, I'll be using that, to refocus and to grow into that. If you're a slightly weaker player, you've got a challenged business model, of course, you might be retrenching from that. So in that environment, it really depends on where you're sitting at. Top of mind is likely to be topics like productivity. We saw a lot of investment over the last 2 years in areas like headcount and growth trajectory. I think everyone's now looking to say, how do I make that as productive as possible and make sure that's efficient? On the other side of the equation, I would say you've got an operating model, and you're saying, right, what's my operating model? How do I get as close as possible to my customer? How do I make sure that my decisions are really appropriate and timely for that market? And I think also top of mind for customers is really, how do I make my money go further? We're all feeling that little bit of stretch with the cost of living. So, the customer's really saying when they're going through an experience, how can I make my money go further? And, at least when I look at the PayPal experience, we've got our PayPal Honey offering, which is an acquisition we did a couple of years ago in the US, and now that's launching globally. What that offers is coupons and rewards, both in a checkout experience, but also in a broader shopping experience. And so, more and more customers are looking for whatever they can do to expand, the return on their dollar, their euro, their pound.
Yeah, another obvious element to that is obviously credit services as well. So maybe, you've recently launched a buy now, pay later service. Maybe you could talk us through how you see that kind of value proposition fitting into something that you provide to your customers.
Yeah, absolutely. So, for us, credit is very much part of the ecosystem. It's related to our payment, core payments wallet experience. So we internally talk about the flywheel effect or the halo effect of credit. As you as a consumer looking to make a transaction, what we're offering you is choice. So you got your debit card, you got your credit card, and also now in your wallet, you'll have the opportunity to do buy now, pay later, or other credit offerings in that space. And so really, PayPal is bringing all that to you as a consumer in that choice, in that purchase experience. The thing we've seen most importantly is that because we're also relating with you through the payment experience, nearly 90% of people who come to us through a buy now, pay later opportunity are already known to PayPal. So we have all that ecosystem of information available to us. That means that, when you apply, we can use all of our payment experience data, all of our operating models there to make very quick decisions and to ensure that we have among the highest approval rates for our products and also among the lowest loss rates in the industry. So using that ecosystem of data is really our secret sauce, if you like. And then, of course, merchants love that. If you're a merchant, you're getting these high approval rates for your offering, and you're allowing yourself to sell what might be like a large white good for people who want to, manage their balances over that. And what we've seen is that, the uplift for engagement is as high as 21% for merchants. So they're seeing that incredible uplift by just offering that buy now, pay later product. So a very successful offering for us in Europe in particular.
Okay, and then obviously, that segues quite nicely onto the other side of the credit spectrum, which is obviously working capital services, which you deploy to merchants across PayPal, which I understand that you've launched in some markets since 2014. How does that kind of complement the value proposition?
Yeah, so the working capital product is very much aimed at the small and mid-sized merchant. These are companies that have grown up with PayPal effectively operating in that e-commerce space. And what we're offering to them is an access to capital, cash, to help manage their daily cycle of activity. One of these small merchants, they might be going through exactly at this point in time of the year, building up their inventories to sell at the end of the year. And so they have those cash flow needs that maybe the money comes in December, but they need it in September. So we have a working capital product that allows them, using all of the metrics again, we have access to their payment history, and so we can make real-time decisions to allow them to have access to that capital and allow them to invest in inventory today, our technology, our sales, whatever it is these small and mid-sized businesses need in order to be successful in a very competitive environment. And so those are the things that, you know, that product for us, we've launched that, as you said, in 2013, 2014. Over 21 billion of capital has been released in that product to all these smaller businesses across the globe, and 3.6 billion of that here in Europe as well. So, you know, something we're very passionate about, helping these businesses be successful.
Yeah, and interesting again to see that kind of data angle to that story. Maybe just to finish off with, obviously we're recording at a time where there's lots of thought around the war in Ukraine. Which I know is a really key topic at the moment. Maybe you could talk about some of the activities. I know you've done a couple of activities in that with respect to support there. Maybe you could talk us through some of the things that PayPal has done.
I mean, you know, Ukraine. When it happened in February, you know, we got together as an office based here in Luxembourg, and as you know, when you go around Luxembourg, it's such a broad ecosystem of people in Luxembourg, very, very wide dispersed group of people. And it was clear to me immediately that this was not just a Ukraine issue. Of course, the people in Ukraine in our office directly affected, but it was across the board. Our people in Moldova, Poland, you know, people in the Scandinavian, all of them had friends and family directly impacted there. And there was a huge outpouring of desire to try and help the Ukrainian people immediately. And so, you know, with PayPal's ecosystem, we got, you know, 430 million consumers and merchants across the globe. So we're very active in the space around charity and donations, and we worked with, you know, bodies like the UN High Commission on Refugees, and we raised over $500 million in funds for charities to directly go into the Ukraine, and working with partners on the ground. So very pleased to be able to help on that, and obviously that work is continuing today. We also have things like our PayPal Giving funds active in each of the markets in Europe. So, you know, helping our ecosystem to drive charitable giving is a very big part of it. On the product side, then, we've also been able to very quickly get together internally and launch products for Ukraine, allowing people to have access to funds, to withdraw those funds to their credit card or debit card, or more importantly, if they're outside of Ukraine, to be able to use those funds, you know, in other countries. So, you know, that work is still ongoing. It's very much, you know, an active project as we speak today, and trying to continue to support, you know, the Ukrainian people at this time.
Very worthy cause. Well, thank you very much for joining us in the studio today, and sharing your views on developments in payments involving PayPal.
Thank you very much, Chris. Thanks. Delighted to see you again.
Well, I'm now joined in the studio by Jacques Putz, who is CEO of LuxHub since its inception in 2018, and who is also chairman of the Financial Innovation Forum at the Luxembourg Bankers Association, the ABBL. Jacques, it's a pleasure to have you in the studio with us today.
Thank you for the invitation.
Just maybe to explain to our audience a little bit, how did LuxHub come into being, and, you know, what was its kind of initial kind of purpose as an organization?
Yeah, in fact, there were different banks in Luxembourg who joined the initiative to create a mutualized platform for compliance reason for PSD2. So all the banks had the same obligation without competitive advantage, so only an obligation to publish technical interfaces to give grant access to these famous fintechs, so the competitors and the challengers of the bank. So it's based on a legal framework. And so we created LuxHub, a platform helping banks to comply to this regulation. And today we are doing it for 42 banks of 10 different countries.
That's a pretty impressive growth, obviously, over the last couple of years. But, you know, over its history, LuxHub has obviously also moved from being, you know, a pure sort of compliance tool to you know, also delivering quite a lot of services in the kind of open banking sphere. Can you perhaps maybe give us a sense of what these kind of open banking services are and how they benefit end customers, perhaps?
Yeah, like you mentioned, it's all about innovation, and banks have sometimes problems to innovate fast.
Yeah.
And we know with PSD2 really the pace is faster, definitely. And so the idea was again how we can help banks to innovate faster. So we decided together with our customers to be the first big fintech, so compete the competitors. So we created products helping banks to aggregate their banks, their competitors. And in Luxembourg, Belgium, France, and also the neobanks and like PayPal or number of things, Revolut, all these are now available in Luxembourgish ecosystem. So we have already, I think, a quite good ecosystem regarding account aggregation and payment initiation in Luxembourg. We have the 5 biggest retailers who use it. And that's, again, we created a product for the banks to innovate. So they outsource a little bit the R&D and also the development. And everyone had the same need, so we create a solution.
Okay, and maybe you could talk us through a little bit also, I mean, because aside from that, you're also in your own right a payment institution, if I understand correctly. So how does that kind of fit into your sort of offering that helps banks to innovate?
Yeah, in fact, we had the problem that at a certain moment we were only technical service provider helping banks. But there was a huge demand from the other economy who also want to participate in this open banking by embedded finance, to allow people to initiate payment in their ERP, in their CRM, on their website. So, and for this reason, we needed to have a license to have the right to use the famous APIs of the banks and to connect to these APIs. So that's the reason why we got this AISP, PSP license from the CSSF in Luxembourg, the Luxembourgish regulator. And yeah, now the first product is there and interesting possibilities. I think in general, TPPs can now, based on PSD2, they can create request to pay without coordination of the bank. So we give just the possibility that you can pay wherever you want, or execute wherever you want, SEPA payment. If it's now on a website, it's in a PDF, it's in ERP, in a CRM, you can do it everywhere. And this is really the beginning of embedded finance. And there's a huge change of mindset. There's innovation in finance outside of the banks.
How do you see, like, how do you see the customer demand element coming through as well? I mean, is this something that is also, you know, gaining traction with end users? I mean, or is it still primarily in quite a nascent stage yet? What do you think?
Yeah, coming back to this request to pay, you can initiate payment and you can pay your merchant without sharing your banking information. It's quite new. All the banking customers can use this service without additional KYC or onboarding. It's just a service that the user can use and trust. It's the most secure you ever can have. You use the credentials of the bank to validate the payment, and you can use it without onboarding and share any information of you to a third party. That's the concrete example.
Okay. And I mean, looking forward now, obviously we're at a stage where we have PSD2 in place for a number of years. What do you think is the next step? Is that it? Are we done? Are we done with open finance? Where do you think this industry is going? Yeah,
you just mentioned open finance. So we come out of open banking, we go to open finance, and there are huge initiatives also on the European Commission now to change also and to foster innovation outside of payment accounts. And I think the biggest change which will come is if you open up the securities accounts through APIs. That's a huge topic. We are part of the Open Wealth Association also in Switzerland, and they are already starting to open up these APIs for security accounts, not only in front to offer services to the end customer, but also to standardize and facilitate all reporting, taxes, and also interconnectivity about life insurances and depository banks. If you would have a standardized access to securities accounts, that would be a huge change in the whole industry. But also on the fronting, I think, we need more competition. And we saw it now. It starts slowly with PSD2 because there were some problems with implementation of banks, but now we are ready, let's say, to go to the market. But the innovation comes now, and banks have still a little bit fear about it, because open banking will change something. It took some more time, but it will change something definitely in the next year. And I think the biggest change which will come is about open wealth and securities account, because especially for Luxembourg, there's a huge change on this. And there's so many old school technology used, especially in this market. And to do a certain application of the securities accounts on a legal obligation, it would change a lot.
No, it's quite interesting that you're kind of juxtaposing there the kind of potential efficiency gains that come out of open wealth with, potential also customer benefits. And, also I think one of the points that I picked up on that was quite interesting there was, banks, some banks seem a little bit worried about this. So, but what would your advice be to a bank, that is kind of confronted with this kind of change towards, PSD2 now in a direction of, potential securities accounts opening? What would you advise a bank to potentially approach this topic looking forwards?
Don't close the eyes. If you see the digital strategies, there are so many legal obligations for banks that the digital strategy is not the most important point in banks. And again, so we are born by 4 big players in Luxembourg, so they mutualize the effort to create digital new products, and also about go to your competitors and see what we can mutualize, that we banks still play an important role in 5-10 years. It's all about doing it yourself for each bank. It's no more an option. We need to mutualize and create platforms for the different topics. If it's for regulatory issue, if it is for reporting issues or innovation, you need to do that. When you see in America which power the credit cards has, and PSD2 was partially born to compete a little bit with these schemas.
Maybe you could go into a little bit more detail there.
I can go in. When you see also the investors, the different schemas of the American schemas invest in European fintechs, it's amazing, because if a fintech wants to go to market with these schemes, they can go quite fast. And we can do it without them. If banks would accept, we need to put us together and create our first scheme. And we have so many discussions on European level that we want to create new schemes, but we also need to operate it and to federate the different actors. And for this reason, we need more political courage, that we put us together and do something together in the interest of Europe and in Luxembourg.
Well, there we go. A very strong call for mutualization and for working together to really create, an ecosystem that is both more efficient than the current one, but also with better service, essentially, for end customers. Jacques, it's been a pleasure to have you in the studio today. Thank you for coming in.
Thanks for the invitation.
Well, I'm now joined by a man who needs very little introduction. He's the co-founder and CEO of Banking Circle since 2013, Anders Lecroix. It's a pleasure to have you join us today.
Thank you very much, and thanks for having me, John.
Thanks. Banking Circle has obviously been set up as an infrastructure layer, providing the background kind of plumbing for cross-border connections between fintechs and other financial services. What have you seen? How have you seen your customers' needs kind of evolve over time? And looking forward, where do you see their needs going?
Yes, I think if we started with the first question, actually the first part of the question. How they have developed. I think when we launched our business back in 2016, it was a very simple solution, and it was still at that time very good for the market because clients had much more simpler requirements than they had today. So we've seen an industry evolve, and we've seen businesses that back in 2015-16 were fairly small really develop into large businesses with quite complex requirements. Which is also why we over time have, of course, made our offering more complex. So going from in the beginning, it was basically Nostro accounts and FX to now over to virtual IBANs, other stuff like payments on behalf of your clients, a lot of different complex services that we see them want now, which makes a lot of sense given it's a new industry that has evolved fast, and they're delivering financial services, both increasing their product offering, complexity of product, and their geographical reach.
Okay, cool. And on that topic of geographical reach, one of the interesting things that you're looking into at the moment is an expansion into the US, which I understand is happening later this year. What do you see as the value that banking circles really bringing to the table over to domestic US players? And then obviously, maybe you could give us a behind-the-scenes look at some of the insights in terms of the infrastructural difficulties that you're potentially having in terms of setting up there.
Yes, I think if you look at what we hope to bring to the table here, Banking Circle is on a journey to enable our clients to operate with no friction in real time between the largest currencies and countries in the world. Today, we have access to SEPA in the Eurozone. We have access to the UK payment system, faster payments, and adding on the US payment system here, basically enable all our clients to operate frictionless in euro, dollar, and sterling in real time, and basically reaching clients or merchants in these regions with these three currencies as easy as possible. And on top of that, we also plan to enter the North American market as a BIN sponsor. So as a card acquirer, a merchant acquirer in Europe, you can now access the US through us and basically have all your settlements, both in Europe and the US, in one interface, with also your acquiring capabilities to be plugged into that interface for North America.
Okay, I think it's a very interesting topic that I think will be echoed in a couple of the panels later on today. This year also, as I was trawling through your website to prepare for this, I came across some quite interesting research that you'd done on the topic known as rebundling of financial services, which you see as kind of a convergence of banking services that are being collaboratively offered by multiple different firms to deliver kind of a sole customer through a sole customer interface or platform. Could you perhaps just elaborate a little bit further on your thinking there, and how you see rebundling vis-a-vis, shall we say, traditional financial services offered through a brick and mortar bank, a universal kind of banking setup?
Yes, I can do that, and it's something that's very close to the theme that Banking Circle has been built to tap into. So if you go back 5-6 years, you saw a unbundling of financial services. Everyone went narrow and deep into one vertical. Different businesses with different product were spun off from larger banks, and then they went deep into merchant acquiring, or they went deep into P2P lending, all sorts of financial services, but basically unbundled. What we're seeing now is a rebundling, and a rebundling where players that maybe 3-4 years ago had nothing to do in financial services are looking into their user base and say, we could deliver financial services to this user base with a payment institution license or an EMI license. Then they tap into that space and then basically onboard or rebundle these financial services into one solution where they face their underlying user base with that and can basically deliver 5-6 correlated products that fit into exactly what their user base want by tapping into someone like Banking Circle to, like, let's say we have 10 products in our store. They can take 4 or 5 of these and they can pick into the geographies that they want to, and by then basically rebundling their own service and their own product facing their user base. Mm-hmm. And this is like to the core of what we do, and we see this trend, I think, being even further enforced in this macro environment now, where most businesses are looking to profitability rather than just growth at any cost.
Yeah. Okay. So a real focus on delivering a good customer experience with still, some shall we say, profitability behind it and efficiency behind it. Back in July, you also announced that you were including a stablecoin, USDC, onto your payment rails. Could you perhaps talk a little bit about your thinking for doing so here, and how you see stablecoins and shall we say that kind of DLT-based solutions as an element of your business going forwards?
Yes, for sure. Digital currencies are a big part of the strategy we have. So again, Banking Circle is the pipes and plumbing where you can and you should be able to operate between different fiat currencies, different fiat clearings as frictionless as possible, and also between fiat currencies and digital currencies. And our enablement of the USDC was the first part of that step, where we over time will enable various stablecoins and digital currencies to also be part of the total platform and environment that is in the ecosystem that today is called by Banking Circle Group.
Okay, well, as I say, it seems an interesting time for your group, lots of interesting projects going on. Thank you very much for joining us today and giving us some insight into into some of the up-and-coming things that Banking Circle is working on.
Thank you very much for inviting me.
Well, now I have Tina Baker-Taylor joining me. Tina is Vice President of Policy and Regulatory Strategy at Circle, and she has previous experience in the policy field, also with the Chamber of Digital Commerce, as well as leadership roles at Crypto.com and Binance. And today we're going to be talking a little bit about stablecoins and payments. So maybe for the uninitiated in the audience, could you perhaps talk us through what exactly a stablecoin is and how it goes about maintaining its value?
Sure. Well, thanks very much for having me, Chris, and it's a pleasure to be with you and the audience today. Stable coins are a bit of a misnomer in their name. I think that the term was coined, a few years ago, early in their evolution, and essentially were digital assets that were designed to not fluctuate in value. And the primary reason for their development early on was really driven by retail and institutional digital asset traders who were trying to move assets across different trading platforms. And as you can imagine, multiple years ago, it was quite difficult to onboard and offboard fiat deposits into digital asset trading venues and then move those assets around to other trading venues. It's quite a disparate trading ecosystem, if you will, with multiple exchanges and lots of arbitrage opportunities for token prices across those different venues. And so, early stable coins were created to be able to facilitate the transfer of funds without having to exit your position out of digital assets into fiat, then move that money to another exchange and wait 3 days to onboard again. So that's essentially what stable coins are. They're digital assets that are designed to maintain a stable value. How they do that is very different. So stable coins, again, encompass a number of different types of asset construction. Circle offers USDC and the latest in our stablecoin portfolio, Eurocoin, which is a euro-denominated stablecoin. But essentially, all of our stablecoins are fully fiat-backed and fully fiat reserved. And so what that means is when a stablecoin, a USDC, is purchased, it is purchased 1-for-1 for a US dollar. And that US dollar goes into a reserve bank account. In our case, that is held within financial institutions in the US that are regulated, and it sits there. It can't hypothecate, we can't loan it out, we can't use it to pay our bills. It literally sits there in a reserve account until such time as somebody wants to redeem it. So our USDC and our Eurocoin are backed by the fiat denomination, either euros or US dollars, that sit in a reserve account and are redeemable one for one at any time. And so that's how Circle maintains the stability for its stablecoins that it offers. Other stablecoins have different methods. They could be backed by a basket of assets. They could be backed by things like precious metals, or in fact, other digital assets, or a combination of all of those. And obviously, those provide different reserve mechanisms or different kind of stabilizing mechanisms that would not necessarily be the same as fully backed one for one and fully reserved. And I think we've seen that over the last couple of months in the markets where a number of other types of stablecoin designs have unfortunately failed. So it's pretty critical when looking at a stablecoin to understand that not all stablecoins are indeed created equal.
Yeah, indeed, the Terra Luna thing is very much on, I think, a lot of people's minds over here. Maybe talking us through also the primary client base that you see for these assets. I mean, are you primarily targeting a retail investor base, or is it more of an institutional kind of backing that are actually holding these stable coins these days?
Yeah, so stablecoins are used by different people for different purposes. Circle is actually an institutionally facing company. So we don't have a retail product or a retail distribution method. Our customers are institutional customers. So they can be digital asset trading venues or other types of digital asset service providers. They can be used for settlement in traditional financial transactions. So, for example, Crypto.com uses USDC to settle their positions with Visa. Using USDC in a trial that was launched last year. So there's definitely a bridge between the traditional finance and the digital currency ecosystem. But ultimately, we have institutional partners, hedge funds, trading venues, et cetera, that are able to mint USDC, and then they can offer those assets on to retail customers. So that is the Circle model. However, the users of USDC vary. So we're starting to see a number of use cases really start to kind of proliferate and kind of come into their own around remittances, payments use cases, certainly a number of use cases around international aid are growing, unfortunately, in the wake of incidents like the trouble that we have in Ukraine at the moment. So if you think of USDC as essentially a digital representation of the dollar, where that dollar would be used in other venues, USDC can be used in the same way.
Okay, and so maybe just following on from that point, if we project forward, I mean, is this essentially a replacement rail to something like Visa or SEPA payments? I mean, how do you see, USDC and other stablecoins sitting alongside these kind of traditional payments rails?
Yeah, that's a great question. So, USDC is about 4 years old. And since that time has facilitated the settlement of more than $6 trillion in transactions. So it's quite a big number. And this private sector driven economic activity using blockchain-based payment systems really offers an alternative payment optionality. And so why is that important? From our view, we believe that a future payment system where a privately issued stablecoin that importantly conforms to regulations can support Visa level transaction throughput and uptime, and can provide the proper levels of security and assurance That is coming. And we believe that the big reason that companies like Visa and MasterCard and WorldPay are not only investing in and enabling crypto, but working with us directly because they see that future driven by payment systems optionality too. So if you kind of think through the lens of how these assets are being used and who's using them, there's some interesting research that came out from Gartner last year that predicted that 20% of businesses will use digital currencies for payments or a store of value or collateral by 2024. That's quite a big number when you think about it. And so both traditional and crypto native businesses can today already accept USDC and payments to take advantage of, high trust, low friction payments, expand their customer base. And when we talk about expanding that customer base, there is a real explosion of net new economic activity that is being spurned by always on device centric payments, which doesn't necessarily mirror or marry up to traditional fiat payment systems, right? Digital assets are on 24/7, 7 days a week. And so when you think about, the dollar props up trillions of dollars of other economic activity, a stable coin, that's responsible, trusted, regulated, can effectively serve to provide that same function within the digital asset world. So, I don't see it as a either or. It's a choice. It's another option that might be more natively aligned to that kind of device on, payments transaction activity. And certainly as we start to see things like CBDCs come online, we're going to move toward, the digital payment, kind of frontier.
Okay, so and that brings me on very nicely to the next topic, which is obviously on the other side, there is a certain amount of government initiatives at the moment around creating their own sort of, shall we say, central bank-backed digital currencies. How do you see these? Are these mutually exclusive to a private asset-backed stablecoin like Circle, or are they part of a spectrum of mutually interlocking products, shall we say?
Yeah. So if we think about how we move and store value today, we have a monetary system that makes use of both public and private money already, and I see no evidence to suggest that that would not continue to be the case within a digital asset future. From Circle's perspective, we believe that it's very possible to promote fair, responsible, healthy competition for the movement of money inside sovereign money boundaries. And so that's where, a number of countries are coming from, where, they're looking to kind of, protect monetary creation and sovereignty. But if you're operating a stable coin or private money within that regulatory perimeter, much like our wholesale banks today, there is no reason to suggest that a CBDC could not interoperate and coexist with stable coins. And ultimately, over the long horizon, I think that those types of digital currencies, fully regulated stable coins, could end up becoming more of a hybrid really between what is today's stable coin and what is tomorrow's central bank digital currency, with guardrails around protecting that kind of air gap between central bank money, personal wallets, and how consumers spend and save. And at the same time, you're then promoting that idea of interoperability and constantly upgradable financial market infrastructure. And that's one of the key things that, Circle, I think, brings to the market and is also focused on leveraging that public blockchain infrastructure as that financial market infrastructure. We really see that that's the breakthrough. When you take a look at CBDCs and a number of the promises that people evaluating CBDCs look to are, the benefits are already really kind of being provided today by stablecoins. And so for me anyway, this is my personal view, it's still quite unclear from a retail perspective how CBDCs would offer a service that would be, you know, differentiated from a stablecoin, which provides potentially levels of privacy and you know, programmability that a CBDC may or may not do. Um, I think the other thing that's really critical, going back to the infrastructure statement I made earlier, is, you know, financial market infrastructure today, especially in the open source arena, is very quickly evolving. And so, if you're building out a CBDC that is meant to address things like access and financial inclusion, it's going to require constant upgrade. And so if you're going to compete on the open market, you know, and be agile and tech forward, and, you know, be fully equipped to reach those populations of people, it's going to be important that those infrastructure stacks are able to innovate and evolve in real time. And typically, central banks aren't necessarily known for that. So for me, it's still an open question, but I absolutely have no reason to believe that they will not coexist.
Okay, so still, I mean, obviously we're still at a relatively formational stage in terms of thinking there, so it'd be an interesting area definitely to pay attention to going forwards. Just a last couple of questions. You launched a euro-denominated stablecoin this year. Perhaps you could talk us through some of your strategy for building out your offering from USDC to EuroC. Essentially.
Yeah, absolutely. So again, going back to kind of the financial market infrastructure and, you know, the increasing demand for, you know, device-centric economic activity, Circle has added Eurocoin to our portfolio of fully reserved fiat-backed stablecoins to continue to really build out that infrastructure and that ecosystem. And we're doing that through the lens of the same trust, transparency, accountability, and pro-regulatory approach that has made USDC one of the largest digital assets today. So one of the kind of key use cases that we're seeing, it's quite early, we've just launched Eurocoin in June, is really an FX, institutional FX use case. And so, you know, if you can use USDC and Eurocoin to facilitate foreign exchange at the speed of the internet, 24/7, making that kind of global transfer of value cost effective, and the conversion back to local currencies possible without, you know, a lot of slippage over the course of hundreds of exchanges. You know, that's a pretty game-changing proposition for, you know, anybody that regularly needs to send money to another country.
That's really interesting. Just one last question, which is a fairly easy one, hopefully, for you to answer. What was the last thing that you bought with USDC or EuroC?
The last thing I bought, I don't know if this counts, but I guess I bought a bathroom. So I've just had a bathroom remodeled in my home. And my plumber is a crypto advocate and happily accepted payment in USDC for all the works done to my bathroom.
Brilliant. Thank you very much, Tina, for joining us today. I really enjoyed our talk.
Well, thanks for having me, Chris.
Well, and now to conclude with a bit of future gazing at the at potential developments in the regulatory landscape. And I'm delighted to be joined in the studio by two real legal experts. Firstly, Nadia Manzari, who's partner at Schultz & Schultz, and who was previously head of the Innovation Payments, Market Infrastructure and Governance Department at the CSSF. And Josh Kaplan, who is corporate partner at Wilson Sonsini, previously COO of Checkout.com, and also with very long-standing experience also at the Fed. So maybe to begin with a couple of general questions about payments regulation and where we see that going. Could we maybe start with some of the recent developments in the EU, perhaps? As part of the ongoing retail payment strategy, one of the things the Commission has just finished doing is a consultation on PSD2. Could you perhaps maybe talk us through what the purpose of this review was and whether we can sort of ascertain anything about the direction of travel of payments regulation going forward? Maybe Nadia to start.
Yeah, I would say that the purpose of the consultation itself was really for the Commission to find out by consulting the stakeholders whether or not PSD2 needs to be reviewed. So when you look at the questions, they are really punctual questions on problems which were arising in the past after the PSD2 implementation. And getting a bit the feeling of the market. Do we need to do some changes? Is there a need to have a PSD3, to have a new PSD, or just amend it or improve it? So I did this consultation with the Thibault de Bassy and the Payment Association and with our members. And I would say that is also a feeling I had with PSD2, which already improved a lot, the PSD1 and the questions which were rising at that time, is that as a general feeling is that the market, the stakeholders and the market, the financial markets, the payment services provider are more or less happy with the PSD2, with the improvement it brought, with there are a majority of members who say that it really led to new innovation, to more competition in the market, to more consumer protection. It also introduced the open banking principle. So in general, while we were preparing this consultation, and not preparing but answering the questions of the consultation, that's a general feeling we could get. But I think when we look at the questions and when you also look at the digital strategy, where they also already mentioned that there might be a PSD3 review, is that we can, I would say we can already identify the direction of travel. There are chances that we will have a PSD3 changes which could occur. I would say maybe we would further develop the payment services. Maybe new payment services could be introduced, like for PSD2, new actors also. I think there is a chance to see that coming with a PSD3. There will also, I would say, be improvements or additional requirements on the security, maybe also changes, because we have also realized that with SCA it was a bit complicated at the beginning. Maybe there is a request from the market to do a few amendments on that. There is also a question in the document and also already in the digital strategy document that where there is a shall we provide payment service providers direct central bank access or not? Yeah. Here also the answers are more or less mitigated. So I don't know if it's a good idea or not to provide this direct access. For some market players, it might be a good idea. For existing market players who are in the market for many years, it might be complicated because they would then need to do infrastructure changes. So that's a question, or that might be an amendment which will at least be discussed while setting up the PSD3 or while working on the PSD3. I already mentioned the security issue. The scope might be enlarged, so there are chances for that. Also for the customers, I would say that we also might see further customer security or customer also easier access maybe for customer. So yeah, we already can identify that if there will be a PSD3, there might be changes on the.
Sorry,
I don't have a crystal ball, but I might.
It's likely to
I could expect that
security, essentially, maybe some
new products
actors.
In order to enhance competition. Again, new products maybe also including products which arose over the last years, like for PSD1, we have seen the TPPs coming up. They have been included in the directive PSD2. Yeah. Now we have those ID providers coming up. There is a request from some of them to be included in the directive. So I think. That's going to happen.
Good. So
might happen.
Switching over to, I mean, one of the core kind of principles of, or two of the core principles of PSD2 are really around, you know, promoting open banking and then cross-border competition, which or cross-border payment services, which are very, very sort of, shall we say, European issues. Maybe you could give us, Josh, some insight on the other side of the pond in terms of what's going on in the States. Are these sort of concepts around open banking or, I don't know, cross-state financial services provision? Is this something that really resonates in the States, or how do you see the US kind of solving some of these challenges?
Well, so we work with clients going in both directions, and we certainly have our US financial technology clients that come to Europe. They see this great framework. They see this ability to passport across all the countries in Europe. And then, of course, we work with the European fintechs that are coming to the US, and they discover an environment where there's no sort of modern framework in which to operate. There's sort of complete fragmentation in the sense that if you're operating in the payment space, you know, the only license available to you is the money transmission license. There's no concept of passporting a money transmission license from one state to another state. So, you know, this is I think initially quite shocking to a lot of European companies to discover that even within a single country they can't cross borders within among the states. You know, I think the U.S. has tried to update and sort of keep pace with the Europeans. The national bank regulator came up with a fintech charter that would have looked vaguely similar to some of the licenses that you have under PSD2, but you know, competition between regulators, competition between lobbying bodies, effectively killed that charter. So we continue to operate with a regulatory framework that's been in place for decades, and I think you know, I think increasingly there are frustrations with the limitations of that model, but for now, you know, the U.S. continues to be a country where to be really directly involved in payment systems, you need to be a bank. Mm-hmm. And I think that what's so interesting about Europe is this openness to allowing payment institutions, e-money institutions, payment initiation service providers to play a role that at least from a U.S. perspective we would have really relegated exclusively to the banks.
Okay, maybe just to reflect briefly on these kind of quite different approaches then between the States and Europe. What does that create for firms that are looking to be, you know, active and operational in both markets? Maybe you could give us some of your experience. I mean, I assume you have clients that are obviously active in both markets. So, what advice would you give them to kind of bridge that gap between the two systems?
Well, unfortunately, they end up having to have very different operating models in the two jurisdictions. So whereas here they have much more autonomy because they can obtain these very purpose-built licenses and operate under these licenses, and in certain countries access the central bank directly. Lithuania is one, the UK is another. In the US, they're almost invariably forced to operate through a partnership with a bank. Mm-hmm. So we have this partnership model in the U.S. that you know that has now been in place for, well, really since this latest wave of fintech cohort, and the model is now fairly mature, and there's a number of banks that are active participants in this market. However, very recently, the regulators have begun to examine this model more closely. And I think it's going to be interesting to see what the outcome of that is, because at the moment, that really is the only model that a fintech in Europe can use to sort of provide something akin to the services they provide in Europe in the US. So we'll have to see how this plays out. There are enforcement actions and examinations that are ongoing at the moment, and anecdotally, we're hearing that some of the banks are starting to revisit the idea of these fintech partnerships.
If anything you'd like to add on the other direction?
Before I go to this question, I forgot to mention one important change, which is, I would be pretty sure that it will come for PSD3, is the open finance, of course. That's an aspect we do not, that really needs to be mentioned here. But so, yeah, going to this question, I fully agree. I think I also see that non-EU competitors, having working with them, really do appreciate this passport, really appreciate this flexibility also all over Europe. And the challenge for them is really when you have a license here and you have an equivalent business in another country, not a member state, the challenge is also to make both systems work in order not to hamper the global. I think that's really for global for firms and mainly for them who are not, where the payment activity is not the primary activity. There it's really a challenge. I just think about marketplaces, for example. The challenge is really how can I implement or how can I have this framework on different continents without hampering my daily business all over the world. So that's really the challenge, I would say, is very...
Yeah, creating that kind of seamless service across quite different jurisdictional frameworks. Maybe just talking a little bit about infrastructure as well. So one of the big pushes that we've seen in the last couple of years is really around instant payments, with obviously TIPS in Europe and the FedNow project coming out of the States. Maybe you could just give me a couple of an insight into what sort of the customer benefits are of these kind of systems, and indeed, maybe we start off with Josh on the States and.
Yeah, so I think generally, I think that the key customer benefits are instant final settlement, right, and at a very low cost, and depending on the particular infrastructure, that instant final settlement is in central bank money, which is also significant to certain market participants. So FedNow is not yet live, but the Fed has sort of brought up the start date. I don't know exactly what prompted that, but there certainly have been a series of very successful instant payment systems around the world that maybe have prompted the Fed to move faster. And these systems range from emerging market systems like PixPay in Brazil to UPI in India to faster payments, which is not a new system, but which has really grown in terms of volumes and usage in the UK. I do think that it'll be interesting to see whether you see the same uptake of FedNow. Those benefits are clear, but will you see the same uptake? In the US, historically, consumers are very, very slow to change behavior. So where you might see FedNow adopted more quickly is maybe in the SME space, the B2B space, consumer behavior shifting to account-to-account payments. We'll have to see. I don't want to throw out a prediction and be wildly wrong, but in Brazil, the adoption rate was phenomenal. Within 1 year of them launching their instant payment network, over 2/3 of the country was using it, which is remarkable.
So are we a bit more like Brazil or a bit more like the States in Europe, do you think?
A bit more in between, I would say. So we are a bit more advanced than the States. I think the TIPS has been launched in Europe in 2018. Mm-hmm. We do also see that the European Central Bank does a lot of effort to promote it and to convince payment service providers to take it, to move to instant payments. There also we had an access problem because at the beginning it were only for participants, direct participants. Now it's also feasible to access to instant payments or to provide instant payment services to your customer when you're a PSP and you're only a reachable party. So they are really doing a lot of things to get it through in Europe. And we also realize, I think you can realize while doing your transfers that it's happening. So it's happening, consumers are taking it over. The advantage, of course, is in the name, it's instant. You can do cross-border payments without being bound by opening hours or anything else. So yeah, it's moving on. There's still some effort to do, I think, but also consumer acceptance is also not the fastest one in Europe. Yeah. But we are doing progresses on it, so I'm quite positive. And there are, I would say, many advantages to use it, not only for consumers, but also for corporates, because their liquidity and their cash management could be easier with instant payments. So, and what I also always see is the opportunity to develop new products based on that service. So, and there I see the innovation potential. I would say there is some innovation potential also in this instant payments sector. Okay,
well, moving on to that topic of innovation, maybe obviously, where TIPS is operating in well, maybe it's not in competition, but certainly in parallel to lots of developments in the field of DLT, particularly around central bank digital currency projects. Do you think these are likely to get off the ground anytime soon? And what do you see them as oppositional to these kind of instant payment systems or not? Maybe Nadia first.
I would not say that the digital euro, that's what you're thinking about, and TIPS might be in competition. I think that's going to be complementary products, or it's going to run together or in parallel. I'm convinced that it's going to take off. Mm-hmm. You asked soon. I am not that convinced that it's going to be soon, because the Euro system is only in this experimentation phase. So they are not really pretty sure at the moment. They are not fixed on one technology. But yeah, when you look at their program and their objectives, I think they have a testing period, an experimentation period until 23, and then 3 more years for pilot or for experimenting if it's going to work. Whether or not the DLT will be there or will be used also depends on the maturity of the DLT, I would say. Will we then have a DLT which allows to be as fast, or which really will allow to implement the model? Mm-hmm. That's something we cannot really predict nowadays, but I'm quite positive, I would say, in general, on all these projects and initiatives. And it must be said that the European Central Bank also does very well. Yeah. So they are quite advanced compared to other countries. So, yeah.
What about you, Josh? What do you think?
So I think in the U.S., I think, having begun my career at the Fed and sort of having some familiarity with the way the Fed thinks about new products and new initiatives, I think we'll probably be the last to act. That said, when we do, I don't think this will be in competition with the instant payment network. I think one of the interesting things about CBDC is that it is a direct liability of the central bank, right? Whereas these instant payment networks are going to continue to pass through the banks, mm-hmm. right? So one of the things they're going to have to struggle with when they finally launch a CBDC, which of course will be a liability of the central bank, is how do you manage the balance sheet of the central bank in light of that? And at the moment, we know that the banks are going through quantitative tightening. If CBDC is something that's on the horizon, do they maintain this large balance sheet in anticipation of that, or do they tighten and then re-enlarge the balance sheet once they start issuing it? I do think there's going to be very different use cases for the two products, because the instant payments products and solutions will pass through banks. Those are ultimately creating liabilities at banks, even though you are then in turn moving money on the ledger of the central bank. But you still have exposure to the bank as you would in a normal banking system. So that is something that will be a fundamental difference that will cause different uses. I think on the retail side, what's particularly interesting about CBDC, and I don't think this is necessarily a use case in the U.S. where credit card penetration and bank penetration is fairly complete, But we work also in some of the emerging markets, and the introduction of CBDC has the potential to allow people who are not in the banking system, who don't have access to cards, to participate in the digital economy. And I think that's an exciting element of CBDC that may hasten its adoption in some of these countries where there's less financial inclusion.
Okay, so a real financial inclusion angle to CBDCs. Well, the clue's in the title of this panel, so we couldn't not talk about it. But obviously, we've got MiCA incoming in Europe as a regulatory basis for essentially a private form of what we could call CBDCs, so stable coins, which are issued by a private entity and backed by some form of assets or some algorithm. What's your view on A, the development of stable coins, and then B, also MiCA's implementation in the EU? Do you see this as a catalyst for future action there or not?
Well, I actually have a question for Nadia on MiCA. My understanding is that it will restrict the use of non-euro denominated stablecoins, and if that's the case, and you would tell me whether my understanding is correct or not, I think that will be an interesting challenge because so much of stablecoin today is denominated in US dollar. Right, Tether is USD, Circle is USD, and so if MiCA is ultimately implemented in such a way that it restricts non-euro denominated stablecoins being distributed and traded in Europe, does that is that a restriction that sort of is untenable in Europe?
That's a challenging question. That again means that I would need a crystal ball. Yeah, you're right. But on the other side, it's really a framework for also, first of all, European stablecoins. So that was meant to address this problematic of exactly having non-European currencies in. But yeah, I think that's like for every regulation. We have now many questions on how we're going to develop or how we're going to set up the models. But I would say that then the future stablecoins, even, as you said, most of them are denominated in USD. They will there will be a way on just adapting the product in order to make it, if they want to provide their services in the EU, within the EU, to adapt it. No, I don't know which solution they will come from. There are also already projects of euro-denominated stablecoins coming or running, but of course, very few. But yeah, I would say once the regulation will be there or will be adopted and implemented, actors, and I saw that for the PSD also. PSD1 was the same. When we had all this, specifically for crypto assets, people came to see me at the regulator and told me, yeah, it's not going to be possible. The model we are running outside of Europe is running like that, and we cannot run it in Europe because the framework is not allowing us to do it. But then what we usually see, what you see at the regulators, and what I also usually see as a lawyer, is that we just build the business models in order to make them compliant. So that's the biggest challenge afterwards for us lawyers, to just try to adapt their product to a regulatory framework we have in the EU. And here again, I'm going to repeat me, I am quite optimistic that we will then see future models of stablecoins emerging, which you would even not think about it today. So that is more or less, I would say, the solution here around.
So regulation really is a catalyst for innovation.
Yeah, that's also what I think about MiCA. I'm very happy that it's there. It really clarifies that financial instruments or crypto assets, you can define crypto assets as financial instruments. So MiCA is clearly is definitely clear on that. And for I think the last 4 or 5 years we were discussing also in the US, the big discussions, is a crypto assets or products built on crypto assets a financial instrument or not?
Yeah,
I think in
the
US
still not clear in the US, yeah. Unfortunately.
and here also, but we had this discussion over the last 4 years. I think I even wrote an article on that subject. And finally this is, and always convinced it is. It looks like a financial instrument, even though it does not, as I said, like for the discussion we just had before, even though it does not 100% fit the legal requirements at this moment. But you just have to structure it as such that it goes into the definition of a financial instrument. So you have many crypto assets which you could define as this, and Mika made this really clear. So that was already a big step forward, I would say. And then it says also it will introduce a framework for similar services, and here again, which at the moment we cannot really qualify under the existing framework. Mm-hmm. But when you look at Mika, what they are building up, or what Mika will do, is really providing similar frameworks for crypto asset service providers, for crypto asset issuers, for stablecoin issuers. They will have a similar legal framework than other actors in the financial sector, which is, for me, the only right way to go and to take it. Because at the end, they all, on a broad, when you look at them broadly, it's providing financial services. So it should be regulated. Yep.
Well, just to move on to our last question, perhaps, which is, obviously, all of what we've been discussing really is backed by a movement of finance increasingly towards internet-based finance and digital-based payments, and we've talked a lot about the positives of that and the innovative potential of that, but there are also potential risks, particularly in the field of cybersecurity and fraud that could impact on end users. What do you see regulators doing to really tackle some of those issues around cybersecurity and fraud? Maybe again we start with Nadia and finish with Josh.
Yeah, there's another regulation which is going to come up very soon, I would say. I think they agreed to find an agreement or to reach an agreement in October on the DORA, the Digital Operational Resilience Act. I love this name, DORA. It's so it's really an easy to remind or to remember regulation. So actually, currently we have in Europe fragmented frameworks for ICT security, and think that's not at the times where we now in, it's not really a good thing to have, because for operators, for businesses, it's really challenging. It might be like in the US for money service business providers. It's really challenging to move from one country to another to adapt to specific requirements. So DORA is going to change that, because DORA will harmonize all the requirements for the financial sector with regard to ICT management. It will require firms to adopt a broader business view of resilience of their activity, and so that we will then, once DORA will be there, we will have a unified framework in the EU, for ICT risk management. And in essence, what is DORA doing? DORA has 5 pillars, I would say. The first one is on ICT risk management, where the businesses have to really focus on their critical business functions. And they also have to identify the critical important important functions. And what is really new now in the latest draftings of DORA is also that the text, there is a requirement now in the text for the firms to carry out business impact analysis based on severe business disruption. So that's also an important point in the new text. That's for the first pillar. The second pillar is, of course, on incident reporting, where you will have a framework with specific requirement on how to do that. An operational resilience testing requirement is in DORA. Information and intelligence sharing is another pillar of that regulation. And, of course, third-party risk management. So there are going to be a lot of changes, a lot of requirements. The other point is that the regulators will have competences to supervise the implementation, and also the implementation of DORA in the entities, but they can also sanction. So there's going to be a clear competence for the financial supervisors to oversee these critical ICT third-party providers also, including the cloud services provider. Mm-hmm. So all those actors, also all those third parties who were at the moment not at all included in a financial supervision, will now be, through DORA, for this part, for the ICT risk management, be included in the financial supervision. So it's going to broaden the scope. it's going to broaden also the competences of the financial regulators, which is important to keep in mind too, not only for financial service providers, but also for third-party service providers who will be then indirectly through DORA also be supervised entities.
Supervision,
yeah. So, and on the top of this regulation, we will see a lot of technical standards coming up. Yeah. So it's going to be challenging. So I think there will be a lot for the firms to do in the next months, because if it's going to be adopted, I don't know, very soon, we have a certain implementation phase and a transition phase, and then they have to be ready.
So firms really need to start thinking about it now then, I guess.
I would say, yeah. Specifically on technical aspects, because it's sometimes quite challenging to implement them within an 18 months time frame.
Absolutely. Josh, how about you and the...
I'm not aware of any legislation on the horizon, but certainly we're seeing a lot more enforcement activity across the various agencies that are charged with protecting consumers in the U.S. Principally on the sort of banking side, you've got the Consumer Financial Protection Bureau, which has been extraordinarily active. The more sort of general consumer protection agency is the Federal Trade Commission. They've also, I don't think, ever been so active in the last several decades. And then the SEC has dramatically stepped up enforcement actions. And all of this has been precipitated by serious losses on the part of consumers across a range of products, including sort of private versions of instant payments, right? There've been a number of media stories around fraud being perpetrated on Venmo and Zelle and other private sector instant payment methods. Obviously, in the crypto space, there's been significant losses reported in the press, and I think this has really prompted the enforcement agencies to take action. In the U.S., that does tend to be how we react quickly to problems is through enforcement. Legislation is a much more monumental process, and usually, the statutes are drafted in a broad enough way that there's latitude for the regulators to take action. Where they run out of that latitude, that's where the legislative branch steps in. So I think there's been a huge uptick in fraud in 2021 across a range of financial products and instruments, and so we do expect a huge uptick in enforcement actions. And I think what you see also is, for example, with the FedNow implementation, a huge emphasis on tools to prevent fraud, because we talked about the advantages of instant final settlement. It also, there's also risks, and those risks are particularly acute in the case of fraud.
Okay. And just to finish off, one last very quick fire question to you both, which is, what's the one thing that you would like to see, action on in terms of financial payments related regulation? Maybe Nadia first. If there was one thing on your wish list, what would it be?
I think that was a good question. I really had to. There's not really one specific thing. Maybe one thing which I would say from a regulatory, from the texts, I would say it would be nice to have one payment services and e-money directive. Okay. I'm pleading for that since the first PSD, but I think that's something I'm doubting that it will happen. And also to really try, when we are doing text or when texts are developed, that we to try to and I take the example of MiCA. Now we have now in MiCA, and that's maybe the negative point, provisions in MiCA on e-money tokens. We have an e-money directive and we have a payment services directive. And the challenge afterwards would be for the providers. If I'm an e-money provider today on a normal technology, on normal infrastructure, the day I would switch to a DLT infrastructure, MiCA will also apply. And here I see the challenges, and I would wish that there would be more alignment on this point, because PSD and EMD are already creating some frictions where interpretations issues and so on. So yeah, that might be at the moment the only wish I would have, to have
more alignment and
less fragmentation, because yeah, the objective of all this regulation is to have one harmonized framework. And now with all these new regulations coming up, I realize that we are again creating some fragmentations. But that's my personal view. I would say I raised this also already with the legislators at the time, but they did not agree on me, with me on that. So it's my personal view on that, because it's, as a lawyer, sometimes quite challenging to know whether exactly what type or how or what type of regulation exactly applies. Sometimes.
Josh?
So I'll stay true to form as an American and say that, for me, there's a market solution I'd like to see as opposed to an administered solution. And the market solution would be, we'd love to see some of our clients think about and develop ways to tie together these instant payment systems and eventually the CBDCs, and build technological solutions to enhance cross-border movement of money, building on the domestic building blocks that are being implemented right now, or have already been implemented in the last few years, and I do think this is going to require a market solution as opposed to a legislative solution, because we are talking about, there is no national legislative body that could put such a framework in place. So that's something we hope to see in the coming years.
Nadia, Josh, thank you very much for your time today.
Thank you.
Thank you.
Well, that about wraps it up for today. I think one of the things that is very clear from today's sessions is that there is still a lot of innovation in payments. We can see the emergence of new technologies which will fundamentally reshape the way that we go about actually conducting payments, and at the same time the regulatory environment in which those payments are offered, both here in Europe and obviously elsewhere in the real world, and be that in the States, be that in the UK, be that elsewhere, is still very much in the process of development. So I'd like to thank all of our speakers for their very insightful comments today, and I'd also like to thank our sponsors for helping us put on this event. You can join us on the 4th and 5th of October for our Sustainable Finance Forum, which is obviously ESG is another very key topic which is driving the financial industry at the moment. But with that, thank you for joining us today, and hope to see you at another of our events soon.